All right, welcome into episode 15 of the Cash Flow Corner, along with myself, Aaron Thomas, with my brother Jacob Thomas. Jake, how you doing?
Yeah, I'm doing well, and thank you to everybody tuning in. And I guess since we're about a week away from Christmas, happy holidays to everybody. I know it's quickly approaching, so happy holidays and happy New Year as we get ready to wrap up this year and head into 2025. And I know us personally, Aaron and I in Twin Lux Capital, we have a lot of stuff going as we approach the year end here and couldn't be more excited really just to get to today's conversation on this episode, as I know we have a lot of good content to cover about a couple of deals that we are happy to introduce and announce that we are rolling out to our investors. But other than that, it's crazy to think that what are we saying? This is the end of season one. We're approaching season two of the podcast, but yeah, couldn't be happier to be here with you, Aaron.
Yeah, I know. And like you said, we got a lot of exciting things coming up year end with these two deals. I know we briefly mentioned it the last episode. And for today, we're going to dive into more information on both of those. It's two deals, so I know we have a lot to get to. So I think we just hop right in.
Yeah, so for the first deal that we're going to be covering today, this is one. Like we said, this is almost like a full circle moment when we started the podcast at the start of this year to this point. It was always our goal, at least to get into one deal, but we're fortunate and blessed enough to say that we have two deals. So I'll just start the conversation off with our first deal that we're happy to announce. It's a multifamily project out here in the Phoenix area with a company that we are happy to partner with, that we've developed a really solid and great relationship over the last year and a half. Those partners are ASIM Capital, led by Hunter Thompson and Tyler Lyons. I know we've gotten the opportunity to really get to know both of them pretty well, but especially Tyler. We've been having a lot of great discussions with him as they've been sourcing and vetting a lot of different deals, and they've really just been trying to get into something as long as we have, just because, as we know, with the transaction volume being down over the last year and a half, there's been a lot of people on the sidelines. So I know from an investor perspective, I know a lot of people are itching and waiting to get some capital exposed out there in the market. So I guess, Aaron, if you could just really briefly kind of roll out or introduce this first deal, that'd be great.
Yeah, so we'll just go through it pretty quick. If you do want some more information on it, sign up on our website or email myself or Jacob. We actually just recently recorded webinars for both of these deals as well. So if that's something that you're interested in, reach out to us. We'll be sending, we can send those over to you with some more detail. But just to briefly go over it, the one with ASIM Capital is North Edge Apartments. It's 71 units stabilized. It's a multifamily investment opportunity. And ultimately, the reason that we wanted to really join ASIM and partner up with them is because they are primarily focused out here in the Phoenix, Scottsdale area of doing multifamily deals strictly in Phoenix. So for us, that was a huge benefit, and we're so happy to be able to partner with them on this deal. Like I said, it is 71 units stabilized. The big thing for this deal was that the previous owner had a loan, a floating rate debt loan on this property. So, as we know, over the past year and a half or so, the interest rates have been rising. So, for them, the owners that are now selling, is they are getting out because it is stressed financially in their terms, but ultimately the asset itself is running as good as you would want. The ultimate kicker is just to have us take over, get a new fixed rate loan. It's going to be a 5-year interest only fixed rate, which for me, whenever I hear that, that just screams cash flow. So we're very excited about that. It is located just outside of Glendale, Arizona, which is right where the Arizona Cardinals football team plays. And ultimately, this is just an area where there's really good demand for a property like this. It's actually the highest growing population growth area over the last 5 years. So that's always great to see. So there's so many key benefits in this deal, but whenever we went through this working with ASIM, pretty much just checked all of our boxes, and we couldn't have been more happy to really jump in on this deal with them.
Yeah, and the main point that I want to circle back on, what you talked about there with the distressed seller, with their floating rate that they have, you're going to really start to see a lot of that pop up across the market right now. A lot of those people that got into deals in 2021, 2022, they're just not able to operate with that loan that they currently have. So you're going to start to see a lot of that across the market. And with this deal, it was an off-market deal, so that's a really good sign of being able to go and get this new fixed rate loan like Aaron talked about. And you don't even actually have to do a lot to this property just because it's already performing really good. When you look at the rental side of things and the rental growth right now, I know I would say that anywhere from half to maybe 75% of the units are up to current market rental rates. And those other ones, you're going to be able to go in, bump those numbers up, get those up to market rates. And so from that perspective, there's a lot of potential to go in and really increase the value on this property.
Yeah, ultimately going through it, like you mentioned, the business plan is that it is a stabilized asset. And it's already experienced significant capital improvements over the course of the past 3 years. The business plan for North Edge is focused on operational improvements to the property, and investors will benefit from a comparable lower risk profile as the business plan does not warrant any significant renovations or material repositioning of the asset. Ultimately, the property manager is headquartered in Scottsdale, Arizona. They currently manage over 1,800 units in the Phoenix Valley. So the property management team is going to stay on board. They are the ideal property management firm to really match up this type of asset, and they have been instrumental in improving the operational results of this community since they have took over as third-party property managers. Also, from the operational improvements, the underwriting on this deal is very conservative as well, which is great to see, even though with the underwriting, you're still seeing about a 20 to 22% IRR with a 2% equity multiple. And just baking that in with the conservative underwriting of saying, hey, we're going to say there's going to be less vacancy whenever we take over and the rents aren't going to be as high, just to really bake in that upside in the future, because ultimately increasing that economic vacancy just makes it more conservative, along with the rent growth of saying, hey, we're not actually going to hit the rents that we're achieving right now until about 12 to 14 months down the road, just to ultimately make it as conservative as possible for those investors, which for us just screams so many benefits that are going to be coming with this property, because underwriting has assumed 0% rent growth for year one, even though CoStar projects that Phoenix will return to positive rent growth in the second half of 2025 once it hits peak supply. And each year thereafter, there will be assumed a 3% rent growth by comparison. So 3.7 to 3.4 to 3.3 over the next 3 years. So ultimately, with what all this says is, with the conservative underwriting and seeing how good of a deal that it is of it just running exactly how it is right now, there is going to be improvements on the property to ultimately increase rents and increase other income streams to increase the cash flow of this property, which ultimately, as we've talked about, just increases the value of this property and increases returns. So I think that's a pretty good high level overview of really just kind of breaking down this deal from the underwriting standpoint to the strategy that goes into this deal. So I'm not sure if there's anything else that you would want to talk about on this, Jake, but I'll leave it to you.
No, I thought you definitely filled in a lot of information there regarding the underwriting assumptions, and that's something where I feel like a lot of partners and a lot of firms tend to use that phrase of conservative assumptions a little loosely. But with this deal, I feel like it definitely fits that mold of, like you said, there is no plan to increase rent growth within the first year. That in itself is really conservative based on the data that we're seeing of, in the Phoenix area, that rental growth will start to increase, like you said, on the back half of 2025. And then along with that too, I know you mentioned the additional income that this property could benefit from that they're not doing already. When you look at things like such as the rubs optimization, which is your trash service pickup, you can start to add in some of those additional income, parking fees, things along that nature, which just go immensely into increasing the value at the end of the day. And then I don't know if you touched on it from an exit strategy perspective, but the plan right now, given that they have this 5-year fixed rate financing, the plan is to hold the asset for 5 years. But obviously, if there's potential based on market conditions and where the market's at, that could be something where they could opt out early and go that route as well. But no, I feel like you filled everyone in, at least in a high level sense. I know we have a lot more details that we could get across to people. So definitely reach out to us, as we would be more than happy to start filling you in on some more details.
Yeah, and again, like I said, we did just record about a 40-minute webinar on this deal a few days ago. So if you are interested, and if that just piqued your interest and you want to learn more about it, please reach out to us and we'll send that your way, just so you can go through the deal on your own, go through the slide deck, go through all of the information. Also, if you want to book a call with us about the deal and you want to run through it with us, we would love to talk to you about that as well. But yeah, just from a high level overview, that's what we're just touching on for today's podcast, because I mean, we could spend a couple hours talking about both these deals, but we're really just trying to hit the high level points on today's podcast. And then from there, if it is something that you think is interesting and you want to learn more about, please reach out to us. And then the second deal that we're going to be talking about is the Trulo Homes, Stone Ridge, in Centerville, Ohio. And we are partnering with Red River Development and Ryan Watts, who was actually just on our podcast a few episodes ago. So if you want to tune into that episode and hear a little bit more from him, I think that would be a great benefit as well. But with that, I think we can jump into this next deal.
Yeah, and honestly, I feel like we have two deals that fit, depending on what type of investor you are, whether you're looking for like an asset that we just mentioned that's already up and it will be stabilized. You kind of have that end of things. But then on the second deal that we're going to touch on now, this is a new development deal that will be taking place in Centerville, Ohio. And this is more along the lines of that build to rent model that we discussed on the podcast previously. And really, this is something that Aaron and I weren't too familiar with, call it, 6, 7, 8 months ago. And it's something that we've done more research on. And it's honestly a really trending sector within the real estate market right now, across, a lot of different markets across the country, just because we are seeing a lot of different things. We're seeing the rising cost of new builds. We're seeing the demand for starter homes really starting to decrease. And this is where I feel like the BTR model starts to fit in perfectly, in between those two slots of being able to give somebody a new product type that really isn't out on the market right now a whole lot. And this is a 200 unit deal in Centerville, Ohio. This is a single family 200 unit deal in Centerville, Ohio. The total projected cost of this development is around $60 million, with approximately $20 million coming from equity. And honestly, for this one, we're looking at a projected exit cap rate of around 5.25. Some different return metrics to be mindful of are we are targeting anywhere from a 21 to 22% IRR, with anywhere from that 1.9 to 2.0x equity multiple, and then anywhere from a 9 to 10% cash on cash return once this asset is fully stabilized. And the timeline for this is anywhere from 20 to 30 months, as there's different phases throughout the development, but they are fully expecting to be stabilized by month 30. So that's just a brief executive summary. Aaron, I know you can hop into a little more of the granular details of the deal, and feel free to go for it.
Yeah, like you mentioned, the build to rent model, it has terrific tailwinds and it's really picking up in the commercial real estate world. I know for this deal specifically, like you mentioned, it is a 200 unit community development. All units are single family homes and they all have their own backyards. They're not adjoining. So it is a housing community, because there was originally listed as a multifamily development that was supposed to happen in this area, but the community kind of shut it down. So Red River more than welcomely went in there and was able to take this site and this piece of land and really set a objective of creating 200 single units. The mix between all units is 1 to 3 bedrooms, so it is nice to have that mix. But ultimately, what's great about the build to rent strategy is it's these single family homes where newer families or recent retirees, like you mentioned, want to take on a new home where there's a housing shortage and housing prices are just going through the roof. So this is a very practical and affordable way that these demographics can be a part and be tenants in this asset class. And also with the built to rent, it's an entire community with the amenities of, let's say, a multi-family vertical apartment complex, but instead it's in a community. There is going to be a pool, a gym, there's going to be a clubhouse. Everything that you would think of from an apartment complex standpoint, it's going to be the same. Instead, it's in a housing community. So that's really what got us excited, especially for us now. We know a lot of people who are fresh out of college, maybe just got married. They're looking for starter homes. And this is the perfect way that they really can begin their transition from that point to then in the future to their dream home. So we believe in this model. Really, I think you did a great way of breaking it down. And then I would say more about the location and the numbers. It's right in between the Dayton and Cincinnati MSA, right off of I-75. So it's in a great location. There's already been a high demand and there's high population growth and high job growth in this area. Also, there is very high increasing median household income in this area. And actually, for this project, this is the highest median household income that Red River has seen throughout their past 6 deals. So that gets us excited. And it's even more of a testament to this location and how much we believe this location and how well this will perform. So again, I think this was just a high level overview. Jake, I'm not sure if there's anything else maybe that you would want to touch on.
No, I just, like you said, we already had Ryan Watts on from Red River, really give a great background of exactly what Red River is all about. But, it goes back to what their track record is. And that honestly spoke volumes to Aaron and I, as this is their 6th deal that they've already done in this BTR model. So given their track record, this almost feels like a rinse and repeat strategy for them. So even more confidence to pursue this deal. But outside that, like you mentioned, with the location, those numbers that popped off from a demographic standpoint of the population growth, along with that high median income per household. And then when you compare that to some comparables of the BTR, there are a few BTRs within that area. They have a high occupancy level, which stands out to us as well. So there is an appetite in this area for this type of asset. So other than that, like you said, I feel like we could keep going on and on. And I feel like I'm rambling at this point. But if this is something where you guys are curious to learn more, please reach out to Aaron and I, as we're happy to have those conversations and, kind of slow it down. I know this might have seemed like a lot of information dumped on you at once, but we're super excited to get these deals out to you guys, and couldn't be more thankful for really a great year and a great year ahead as we look into the future.
Yeah, that definitely was a lot of information. I'm not even sure if we had introductions on this podcast, but we knew we wanted to get right into the details just to kind of explain both of them. And ultimately, if you are interested, again, reach out to us via our website or our emails that are at our website, because we would love to have a conversation, learn more about you, your investing strategy, what your portfolio might look like, how these deals might fit into your portfolio, but ultimately just to set a real estate investment strategy for your future, because there is 2 great deals here that both have immense benefits, and they're different in their own ways, but they're both great ways to either get into investing, or if you have been investing already, these are 2 great deals that you could add to your portfolio. Because another great little tidbit is one of them has a 4-year planned exit and the other has a 5. And I know a lot of investors like to stack their investments year by year basis. So that's also another great tidbit. But ultimately, reach out to us. Let us know what you think. Let us know if you're interested. I know we've already had a good amount of people reach out to us. We already have a good amount of subscription on these deals, because the biggest thing I would say is to really look at these and get your offers in, because one of them is actually already at 80% subscribed. And me and Jacob both say, at least get your offer in, get on the subscription, because it's always easier to take you off the subscription and put you on the wait list than it is to get on the wait list and actually get into the deal. So just being able to really put your offer in. It's not legally binding by any means. It's just a soft commitment, but I would definitely highly recommend that. But I think that's great for today. Jacob, I'm not sure if there's anything else you would really like to wrap up with.
No, not really. I just kind of reflecting as we go into the new year of when we first shot our first episode all the way to this point, and thinking about all the hard work and effort that has led us to this point. I know we're just kind of only just cracking the scene and of what we want to do, but it feels really good knowing that all this hard work that we've been putting in, and if we can help people out along the way, even better. But other than that, I'm not sure if we'll have another episode out before the new year. So you guys enjoy the holidays, enjoy the time with your family, and we can't wait to catch up with you guys.